Assalamualaikum and hi. Today we are going to present about Rahnu and Hiwalah. So first I'm going to introduce to our group member, which is first Alia Maisara binti Adnan, Nur Azira binti Samsudin, Kaisara Mizawazuna binti Muhammad Zaki, Asna Wazni binti Abdullah, and Intan Shafira binti Abdul Latif. So let's start with Rahnu, which is going to be presented by Alia Maisara binti Adnan and Nur Azira binti Samsudin.
Assalamualaikum warahmatullahi wabarakatuh. I am Alia Maisara binti Adnan. I would like to explain about the definition of Rahnu. The word Rahnu is an Arabic noun derived from the word Rahana, which means either constancy and continuity or holding and binding. Technically, Rahnu, which is also termed as pledge, mortgage, pawning, collateral, charge or lien, refers to taking an asset as security against a debt, whereby the secured asset can be utilized to repay the debt in the case of non-fulfillment of the financial obligation. Rahnu is a charitable contract as it does not require any financial obligation on the part of the murtahin, which is the pledgee or creditor, when the rahin, pledger or debtor, gives him the pledge object. In this case, Rahnu contract is similar to the other voluntary charitable contracts such as Hiba, which is gift, Ijara, which is simple borrowing, Qard, which is loan, and last one is Wadiah, which is deposit. So, there are 5 essential elements of Rahnu, which is Sighah, contracting parties, debtor and creditor, pawn object, which is the marhun, and the last one is debt, which is called marhun bih. Next, there are 5 conditions of a Rahnu contract. The first one is conditions related to Sighah. There are 2 opinions from Muslim scholars. From the Hanafis, the Sighah should not be suspended by a condition or deferred to a future date, while from the other scholars, valid conditions are the ones that do not contradict the implications of the contract and do not lead to a forbidden transaction. The second condition is condition related to the contracting parties. From the Hanafi and Maliki scholars, they should satisfy the qualifications of the sale contracts. Whoever is allowed to sell is permitted to pawn, while, based on the Shafi'i and Hanbali scholars, the contracting parties need to fulfill the qualifications of both sale and charitable contracts, as Rahnu is regarded as a voluntary action. Next, we will move to the third condition, which is conditions related to the pawn object, which called marhun. Most of the jurists agree that the pawn object must fulfill the conditions of a sale object so that it can be sold to repay the debt. This is based on the maxim that rules properties ineligible for sale are also ineligible for pawning. The conditions are being valid property, being a permissible item, being existence at the time of contract, and the last one is being deliverable. Then, the fourth condition is condition related to the debt or liability, which called marhun bih. The underlying debt must be an established, binding and enforceable, then must be known and defined to both contracting parties. Next, must be matured. Based on the Hanafi and Maliki, the underlying debt must be liable to be paid out. Rahnu is invalid if liability is based on usufruct. However, based on the Shafi'i and Hanbali scholars, it allows such kind of liability in Rahnu. The last condition of a Rahnu contract is condition related to the receipt or possession of the pawn object. As I mentioned before, the pledge asset should be in the receipt or possession of the pledgees. There are several conditions for the validity of Rahnu, mainly are permission of the pledger. The second one is eligibility of the contracting parties, and the last one is permanency of possession. Okay, now I will pass to Azira for explaining about the operation flow of Rahnu.
Thank you, Alia. Now I will explain about the operation flow of Rahnu. From the diagram shown, we can see that Rahnu contract involves two parties, which are the bank as pledgee and the customer as a pledger. Firstly, the bank will provide an amount of financing to the customer. Then the customer will pawn a valuable item as a collateral to the bank for the financing amount that he borrowed. During the maturity of the contract, the customer will pay off his loan and the bank will return the item pawned to the customer after the settlement of his debt. Next is the application of Rahnu. Rahnu has two different forms, which are paper form and object form. First, under the paper form, there are property documents, vehicle papers, suku, and shares. And under object form, there are jewelries, ornaments, and branded accessories such as watch or diamond. Moving on to the differences of Rahnu and conventional pawning, Rahnu is literally an institution-based, and some of the institutions are Islamic banks, corporation, and Yapim. Meanwhile, conventional pawning is an individual-based, and it's usually formed through sole proprietorship. Second, items that is accepted for Rahnu is pure gold. This is because the value will be stable and fluctuation in gold value is not excessive. However, items such as gold-plated item, pound gold, or white gold are not accepted. But for the conventional pawning, any valuable items are accepted. For example, jewelry and diamond, antiques and artworks, gold or silver. The next point is insurance. Item pawned under Rahnu is covered through takaful. However, for the conventional pawning, most of the time no coverage is offered, and if the item pawn is lost, only small compensation will be offered. Charges. No interest is charged for Rahnu, and there is only safekeeping charges that need to be paid monthly by the customer. But for the conventional pawning, there is interest charge, and financially speaking, the customer has to pay more for conventional pawning compared to Rahnu. For the ownership, customer must prove ownership through legal document. If it belongs to someone else, a consent or approval letter must be included. On the other hand, there is no requirement to prove the ownership under conventional pawning. Next is default. Under Rahnu, default on loan payment will lead to the pledged item to be auctioned publicly. However, notice will be sent to the pledger beforehand. As for the conventional pawning, the item will be made available for sale upon the past due date of repayment if there is default by the pledger. And lastly is the balance of money left after the auction has taken place. As for the Rahnu, the balance will be returned to the pledger, but for the conventional pawning, there is no guarantee that the balance will be returned to the pledger. Moving on to the last slide of this topic, why we are not encouraged to choose conventional pawning. Based on the previous slide, I can conclude that conventional pawning has high interest rate and is very usurious, which is forbidden in Islam. It also contains exploitative activities which are unfavorable to the customer or the pledger. Besides that, conventional pawning tend to decrease the value of the pawned good, so the item will have a low collateral value during the valuation process. That's all for Rahnu, and I'll pass the presentation to my groupmate.
Thank you, Azira. I am Kaisara Mizazuna binti Muhammad Zaki will explain about Hiwalah together with Hasna Mazni binti Abdullah and Intan Shafira binti Abdul Latif. Hiwalah is a transfer of a debt. Hiwalah literally means to move, shifting from one place to another. But technically, terms can be understood as to make a transfer of a debt from one debtor to the debtor account of another, or to transfer a debt from one person to another with the same price. It comes to the consequence that the liability of debtor is abolished. In other words, the first obligator is freed from any financial obligation. According to the Mughni Muntaj, the term Hiwalah is referred to the debt transfer from one party or person to another. Next, let's move to the pillars of Hiwalah. There are 5 pillars of Hiwalah. First is Al-Muhil. Al-Muhil is a person who is transferred his debt to another person or the transferor. According to the Shafi'i scholar, the debtor must have the credibility to imply a contract which have the ability to think, reason, and also property. The transfer of debt cannot be done upon by the man who has the mental disorder and children. Second is al-muhal. Al-muhal is a creditor whom his property or debt is transferred to be paid by another person instead of his debtor or the transferee. Muhal must also be a person who is accreditable to imply a transaction as muhil. Third is al-muhal al-lahi. Al-muhal al-lahi is a person who has the responsibility, liability, and obligation to pay debt to the muhal or creditor. The condition of probity and reason are a must. Next is al-muhabbi, which means the things which are transferred by hiwalah or the debt. And lastly is siha, ijab and kabul. The ijab or offer takes place when the debtor or muhil say, I hereby transfer your debt to this person, while the kabul or acceptance is when a creditor or muhal say, I accept it or I agree. Next, let's move to the categories of hiwalah. There are two categories of hiwalah, which are hiwalah muqayyada and hiwalah mutalaqah. Hiwalah muqayyada is restricted hiwalah. It is a transaction where the payer is restricted to settling the amount of the transferred debt from the amount of financial or tangible asset that belongs to the transferor and is in the possession to the payer. An example for hiwalah muqayyada: A owns to B about 100 Malaysian ringgit and B owns to C about 100 Malaysian ringgit. Then B asks A to settle his debt to C. If A and C agree, then A's debt that should have been paid to B is considered settled. While hiwalah mutalaqah is unrestricted hiwalah. It is a kind of the transfer of a debt in which the transferor is not the creditor to the payer. The payer undertakes to pay the amount of the debt owed by the transferor from his own funds and to have recourse afterward to the transferor for settlement, providing that the transfer for payment was made on the order of the transferor. An example of hiwalah mutalaqah: A has debt to B for about 100 Malaysian ringgit, then A transfers the debt to C until C has the liability to pay the debt of A to B without mention transfer the debt to exchange compensation for payment the debt of C to A. That's all for me. I will pass to the next presenter. Thank you.
I am Asna Mazini bin Abdullah and I will explain about types of restrictions under hiwalah and major consequences of hiwalah. For the types of restriction, there are two types of restriction, which are hiwalah ad-dain and hiwalah al-haq. Hiwalah ad-dain is the transfer of debt from a person's obligation to another person's obligation. It is a replacement of debtor to another debtor. Okay, for hiwalah al-haq, it is the transfer of right to claim from one person to the other, which is the replacement of creditor with another creditor. For the basic rules and conditions of hiwalah, number 1, all contracting parties must be legally competent to act independently. Number 2, all relevant parties, which are the transferor, transferee, and payer, shall give their consent of hiwalah agreement. Number 3, the acceptance of creditor and transferee should be given during the session of the contract. Number 4, the subject matter of hiwalah should be debt and not other things other than debt. Number 5, both the transferred debt and debt to be used for settlement should be known and transferable. Number 6, the transferee should owe a debt to principal debtor. Lastly, the principal debtor, which is al-muhil, should be owe a debt to the creditor, which is al-muhal. Okay. There are some major consequences of hiwalah, which are: number 1, a valid hiwalah discharges the transferor from any debt liabilities and any claims in respect for it. It is meant that the transferor will have no right of recourse against the transferor for payment. If the acceptance of hiwalah was based on the conditions that the payer must be solvent, the transferee will have the right of recourse if the payer is not solvent. Number 2, the transferee is entitled to claim amount of debt assigned to him through hiwalah from the payer. And number 3, in restricted hiwalah, the transferor is no longer entitled to claim from the payer who owed him previously. and amount transferred to the payer in respect of the debt to be settled. Lastly, the transferee is entitled to have right of recourse against transferor in the following situations, which are: number 1, death of payer in bankruptcy; number 2, the liquidation of institution, which is the payer in case of bankruptcy before payment of debt. Next, the payer denies concluding the Hiwalah contract and has been taken to do judicial oath to this effect, and there is no evidence to prove otherwise. Lastly, the payer declare bankrupt by court order.
So I'm going to explain more about Hiwalah in terms of the termination of Hiwalah. First is a true mutual agreement among contracting parties to terminate Hiwalah. Second, the settlement of debt by the payer to the transferee. This means that Hiwalah will be terminated once the debt is over. Third, the debt of the payer and the transferee inherit the payer property, which means that the payer is now dead. So the transferee is capable to take the payer asset in order to settle the payer debt. It is because once the payer is dead, his or her asset need to be divided into several sections. But first, his or her family need to settle the payer debt. And last is a debt that has been written off by the transferee, which means the debt has been totally paid by the debt. So move next to the contemporary application of Hiwalah. Hiwalah is commonly used in revocative, trade payable, and remittances. For the instance, a customer who is indebted to a vendor requests a bank to settle his debt. The customer therefore assigns the debt that is evidenced by invoice to the bank. Then the bank pays the vendor on behalf of the customer. Upon maturity, the customer shall pay the full amount back to the bank. The figure that has been shown illustrates the application of Hiwalah transaction, where the first, the customer is indebted to the supplier for a sum of 50,000 ringgit. Then second, the customer requests the bank to pay 50,000 ringgit to the supplier. Third flow is shown that the bank will make settlement of 50 ringgit to the supplier, and lastly, the fourth way, the customer will pay back 50,000 ringgit to the bank. So move to the last part, which is model application of Hiwalah, where the first is suftaja or bill of exchange. Suftaja here means that it's enable a debtor to make a payment in another place through his agent or a second person. For example, a person gives a portion of his property to a merchant to pay to another person in a different country. The sender benefits by insuring himself against the risk of transferring that property himself. The second one, it is other banking product and facility. The first application is for the debt, and this one for the banking product. So there is a very banking product that has been listed, which is banker check. A banker check is a check issued by a bank payable to the order of specific payee for payment within a local area. Any variation of rate will be decided by credit committee on remittance and product. Second is demand draft. A demand draft is a method used by an individual to make a transfer payment from one bank account to another. Demand draft differ from regular normal check in that they do not require signature to be cashed. Third is telegraphic transfer. Telegraphic transfer is an electronic method of transferring funds utilized primarily for overseas wire transaction. And fourth is mail transfer. Mail transfer is similar to the telegraphic transfer, but mail transfer is done by mail. The buyer will hand over the payment of the good to the remitting bank that will authorize its branch bank or correspondent bank in the country of the beneficiary by mail to make the payment to him. So that's all from our group. Thank you for listening. If there are any questions regarding our presentation, you may ask. Thank you.